wage growth remains high, but has been gradually moving toward levels that would be more consistent with 2% inflation over time. So real, which is to say inflation-adjusted wages, wages after inflation, are also growing again as inflation declines.
Here we go. PMI numbers. Let's see what we got here. Dollar index coming down here a little bit, but not a substantial move just yet. Let's go see if we can check the numbers and see if we did in fact get something of interest. There it is, 49.9 on the manufacturing prices, and PMI did in fact come down, 46.7. Probably favorable to S&P, gold, etc., euro as well. Euro, by the way, tagging a support zone and finding potential support. We'll watch this candle. Dollar index coming down pretty hard here. Not a substantial move by any means, but a move nonetheless. Gold ticking slightly higher. And again, we're watching for the follow through here, because sometimes you get these news events and they have a delayed reaction, they have no reaction. It just depends how surprising the number is. And I would say that you kind of had some mixed, we have one green, one red. That should tell you something right off the bat. But you do have 46.7 on the manufacturing PMI, which was what the market was kind of looking for. Contraction in the economy right now is still kind of favorable for like equities, like indices, right? Because the idea being, if that is going to push the Fed off of the idea of rate hikes, but also maybe more importantly, even start to get closer to the discussion of rate cuts. So if inflation continues to come down and the economy is steady, but kind of cooling as well, that has the potential to be bullish for gold, bullish for S&P. And that's sort of what we're seeing so far. We're seeing gold push 2046. By the way, I mean, gold, we hadn't really even covered it too much on the channel, but gold securing a place in the 2000s here. And, let's go full screen on gold while we're talking about it. We'll take a look at gold, and look at this. Gold making a push here, guys. Here's your 15-minute chart. For the day traders in the room, keep an eye on this 2048 zone, this level of past resistance. Could come into play here in just a moment. I mean, it looks like price wants to squeeze on up to that 2048 price point. And, in terms of support and resistance, if you're a day trader here watching gold, or even just a swing trader, honestly, it's still valid information here. You got your 30-minute view as well, looking interesting, and even your 1-hour chart. If price can get above this area, there may actually be, and look at that, 2048, look at that. We're popping right up into that zone. Gold is moving here this morning. Let's see if we can, again, now the question is, Nick, what do we do? Well, here's what I think about gold. If you break and close outside of where we previously failed, that tells us a shift in the market in terms of price action. So I'd be interested to see, can we actually close above 2048 with meaningful, momentum? Again, if you're calling for gold to push up, we need to see something decisive. We need to see something strong, because guys, we are talking about an all-time high for gold is $25 away, right? $25 away. To get gold up into the all-time highs, it's got to have some serious momentum. And then you start talking about swing traders wanting to break out of that level. It gets me excited just talking about it, because in terms of longer term, gold, in my opinion, is long overdue for an all-time high breakout. And so that's why I've been kind of looking for these setups. I think if you're a swing trader or a day trader watching gold, this is just my opinion, as everything always is on these shows, or our guest's opinion, but these are opinions being shared. I'm not telling you what you should go do with your money by any means, but in my opinion, I think gold heads back to retest the all-time highs. And I think on this fourth attempt, longer term, you look at a weekly chart, this is going to be like the fourth time. If we do get back up to those all-time highs, likely we break them. Okay, so I'll see. We'll of course, we're here every day covering this content. but I'll be watching gold, and I think that the path of least resistance is price wants to go test. Now, what gets us above the all-time highs, that's up for debate. And I would say US debt looking kind of creepy, potential recession fears kind of still in the cards somewhere, the US dollar looking very weak. There's some catalysts that could get us back up to and perhaps beyond the all-time highs, but we'll watch that as we get closer. But anyways, again, PMI numbers here coming in cooler than expected, and that cooling is in fact having an impact. In terms of the PMI numbers here today, some people are pointing to the fact in the chat right now that gold is breaking out or seemingly trying to do so. And it does kind of make sense if you think about it. PMI, a measurement of the economy, slowing economic figures, that environment, generally speaking, very good for gold. And it's why I think, Kenzo, that gold is headed to go retest the all-time highs. But what do you think? I mean, clearly, again, PMI numbers having a positive impact on gold, slowing economic data, bullish gold. What do you think about gold right now? Are you in a trade? Are you looking to trade it? Do you think it's overdone? What do you think?
Yeah, I think gold can still push higher. Actually, I was still waiting for it to retest. Unfortunately, I was busy with other things and it retested here and now it's far. So maybe I will get it above there, or maybe I can wait for another retest. But I think the more the economy is slowing down, now it's a good time to buy gold as a safe haven, because we don't really like very weak economy. So we might see it push to the upside. Like, as if I actually heard on the news, I was listening to the news, there is a chance that next year they might cut the rate. And that is also not really good, especially when the economy is not performing very well. So at the end of the day, it means things like gold, they can actually push higher. I think for now, I can say they don't actually have a choice, because they're trying to slow the inflation. At the same time, that hurts other economic activities. So they are forced to try to regenerate that movement in the market, because if they cut, it means now other smaller businesses, they can actually take loans. So circulation of money is going to go back to a little bit normal. But if they just pause like that, it's also difficult for them, because it's like they don't really support the economy. So now interest rates are very higher. So it's not easier for anyone just to take loans, to buy cars. So all those activities are a bit expensive now. So they have to, they are forced. It's not like maybe they have any choice. If they have any choice, I think, yeah, I don't think currently they don't really have any choice. They just have to. If economy keeps going down like this, they have to do something.
Yeah, and what I think is interesting, Kenzo, is, to both of those scenarios, cutting because they have to or cutting because they can, both of those scenarios, they, in some ways, offer kind of a bullish environment for gold. Now, if you think about it, if they cut because they can, it means that inflation is cooling, the economy is okay, but that's going to lead to a weaker dollar in terms of economy cooling some way. And so that's good for gold. But if they cut because they have to, and fear is very high, and recession possibilities, and inflation keeps going lower at beyond where they even wanted to, if that were to happen, that is incredibly bullish for gold. In the meantime, we had a discussion just before you were coming on about gold. And gold is an incredibly interesting market right now, at least in my opinion, because we have this scenario where economic data, we had PMI numbers, yet again, more cooling economic data, and you see inflation coming down. And it does paint an interesting story for gold. I want to get your opinion on it. What do you think about gold right now? Obviously, for me, it's not like at a place I can buy it or anything, but it, to me, generally looks bullish. What do you think? Do you agree? Do you disagree? Do you have any opinions on it?
I always disagree with you. So whatever you do, I do opposite of.
That's just being smart.
As somebody said, was it Vincent said? Vincenzo says, I'm going to stop trading against you, and I'm going to trade with you now. I also want a deeper pullback on gold. But yeah, it's dollar weakness, it's gold strength, it is gold seasonality, it is the Indian wedding season. There is demand for
yes.
physical gold going in. There is central banks buying gold. So higher highs, but it's difficult, the volatility short term.
Yeah, no, that's a good point. I mean, the volatility dropping, and I want to say, even though all conditions still point bullish, it gets tricky when it's already at the highs. And for me, it's like, if I'm going to enter this trade as a trader, my job is again to allocate money where it makes sense and when it makes sense to do so. So for me, I'm waiting for a pullback as well on gold. I think we're kind of stuck in this range. Either a break and retest would be of interest, or perhaps a pullback to this zone I might take as well. So
wage growth remains high, but has been gradually moving toward levels that would be more consistent with 2% inflation over time. So real, which is to say inflation-adjusted wages after inflation, are also growing again as inflation declines.
Oh, it's this is where I expected the peak to be today, anyways. But I didn't hear anything particular. He still said that we don't know. Well, we're not sure if our policy is restrictive enough. That is a bit more bullish, but generally speaking, he didn't say anything about higher interest rates or that inflation is too high. I said something earlier, or was it I say that I expect spending and output to slow over the next year, which is kind of the main motto of what we wanted to hear and had to see him say. So, what do you call it? Continue as normal.
Yeah, I mean, what he said about output is kind of nothing new either. He said something is because we're raising interest rates, that's what we expect. And they even said that earlier this year, and then GDP numbers were better than they expected. So, he has to just remain cautionary and say, we expect these things to happen, but they may or may not. And I think I read something earlier today that the Fed can't really afford to hike again. Having the 10-year note above 5% was like a red flag. So I think they're going to try to avoid that as much as possible.
if you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.